Hey everybody, Smart Silver Stacker here. Earlier this week, the G7 price cap and EU embargo on Russian oil went into effect, but there hasn't really been any major market fallout as a result of this situation just yet. But Credit Suisse analyst Zoltan Poszar has just put out a new piece in which he has forecast a potential Russian countermove to the G7 price cap, which involves pegging the price of oil to gold. And if Poszar is right, we may see the price of gold double to nearly $3,600 an ounce. We're going to talk about it in today's video, so let's get to it.
Okay, so starting off today, let's take a look at the 1-month chart for the price of gold over here at SD Bullion, who also happens to be today's video sponsor. So if you're in the market for some gold or silver bullion, check them out with the link down in the description. And you can see here gold has had a pretty good month so far. At the beginning of November, the gold price was around $1,674 an ounce, and today we're knocking on the door at $1,800. So we've seen some pretty good gains. But according to Zoltan Poszar, he's an analyst over at Credit Suisse, we may be seeing some very significant gains in gold in the very near future. In fact, he's forecast that in this scenario in which Russia pegs the price of oil to gold, we may see a doubling in the price of gold. And you might remember Zoltan from the piece he published earlier this year titled Bretton Woods 3, and that was the document in which he forecast a breakdown of global supply chains and also a shift towards commodity-based money in the East. Well, he's put out a new piece, and I wasn't able to actually find the full text of this document. However, over here at vblgoldfix.substack.com, there's a bit of a preview of this document, and I think it covers all of the relevant portion for all of us stackers out here. And I'm just going to go ahead and read this excerpt for you. So he says, "War is not about gentlemanly conduct. The cap of $60 per barrel for Russian oil equals the price of a gram of gold at current market prices. Let's imagine this set up as a peg. The G7, led by the US, effectively pegs the US dollar to Urals, and that's Urals oil he's referring to, or Russian oil, at $60 a barrel. In turn, Russia pegs Urals to gold at the same price, a gram of gold for a barrel of Urals. The US dollar effectively gets revalued versus Russian oil, a barrel for less. The Western side is looking for a bargain, effectively forcing a price on the plus in OPEC+, and that would be Russia. But if the West is looking for a bargain, Russia can give one the West can't refuse, a gram for more. If Russia countered the price peg of $60 with offering 2 barrels of oil at the peg for a gram of gold, gold prices double. Russia won't produce more oil, but would ensure that there is enough demand that production doesn't get shut. And it would also ensure that more oil goes to Europe than to the US through India. And most important, gold going from $1,800 to close to $3,600 would increase the value of Russia's gold reserves and its gold output at home and in a range of countries in Africa. Crazy? Yes. Improbable? No. This was a year of unthinkable macro scenarios and the return of statecraft as the dominant force driving monetary and fiscal decisions. And so the idea here is that Russia could use as a countermove to this G7 price cap. So the West has effectively pegged the price of Russian oil at the cap of $60. If Russia decides to, say, sell 2 barrels of oil for a gram of gold, if they price oil that way, then that would mean that 2 barrels of oil, so at $60 each, is worth a gram of gold. And that's double the gold price today. So you would need $3,600 gold an ounce in order to make that happen. Now, if Russia were to take this approach, it would mean that they would be cutting their revenues for oil because they would be essentially cutting the price in half. If right now you can buy a barrel of Urals oil for a gram of gold and they start selling 2 for a gram, well, they're going to be giving away oil. But at the same time, like Zoltan says, it would reprice gold to about $3,600. All of Russia and China's and anybody else holding large quantities of gold, all of their reserves would go up in price. And this would also likely have some significant impacts on the US dollar. And I think that what we've seen from Russia over the past year is that they are willing to sacrifice short-term revenues from their fossil fuels and from their oil exports in order to pursue broader geopolitical agendas, such as their agenda of de-dollarization. And this absolutely is a move that we could see. And like I said, it would mean that they'd be giving away their oil cheaper, but at the same time, it would revalue their reserves. So they'd be getting kind of a give and take there. And also, it would be a major blow to the dollar. And on the same note, today we got some news out of China. They've reported an increase in their gold reserves for the first time since 2019. Now, they didn't report a tremendous addition. They said it was about 32 tons of gold that they've added, which would be about $1.8 billion worth of gold. But I think we all know that Chinese gold reserves are well above the stated levels. And so BRICS nations, they may be coordinating this behind the stage. And also, Chinese President Xi Jinping is visiting Saudi Arabia this week. So, what they discuss could have some significant impacts on the oil market as well. And maybe there's some kind of a coordinated pushback against this price cap and embargo scheme that we haven't gotten wind of yet. And, we won't until the time is right for the BRICS nations to announce that. It's only been about 2 days since this price cap went into effect. Even though it hasn't roiled global energy markets and global commodity markets yet, there's still significant potential for that to happen moving forward, as Zoltan points out. Now, another thing I want to take a look at here is the long-term chart for the price of gold. And I pointed out in a video, and I've heard other people mention this as well, that the long-term chart really looking like a cup and a handle formation. Now, this is the handle here, and you can see that earlier this year when gold had its big spike up following the Russian invasion of Ukraine, it broke out of that handle formation. Since then, of course, the price has retraced way back down, but it has retraced down to this trend line for the handle, and you can see it's bounced off of that level. And if we see an announcement like Russia pricing oil in gold, especially at something like a gram of gold for 2 barrels of oil, then we could see this chart come to its fruition, which would be a significant move up from here. A cup and a handle formation like this is a tremendously bullish formation. And typically what you see is you got to look at where the bottom of the price is. You got to look at the bottom price on the formation, about $1,000 here back in 2015. And the typical way you arrive at a price target for a formation like this is you take the difference between that and the top, which is about $2,100. And you could add that amount to this top. So basically, you take the $1,000 difference here and add it to $2,100. That gets you to about $3,200, and that's right in line with Zoltan's forecast here. So I believe we may be seeing significant opportunity in the price of gold here. And there's no guarantee that Russia will make a move like what Zoltan Poszar is describing here. But if it does, overnight, the price of gold could skyrocket. And as always, none of this is financial advice. I am not a financial advisor. I'm just sharing with you some information and my thoughts on things, but I'd like to get your feedback. So leave me a comment down below to let me know what you think. Is there a possibility that Russia may be pricing oil in gold in the near future? Do you think that that's going to be their counter move to the West's price cap and this embargo? Is that how they're going to flip the script? Leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking, and I'll catch you next time. Smart Silver Stacker, out.